the Russians had hundreds of billions of dollars of gold and sovereign debt seized, but the Chinese have $3 trillion worth of that stuff. Wow. So if you're Chinese and you're thinking, what happens if the United States just seizes $3 trillion of my money? That makes you a bit insecure. And of course, that rubs off on the Indians, the Pakistanis, right? Everybody in the world is now insecure about their sovereign reserves at the corporate level. Every company is insecure about their treasury, and every individual becomes insecure because what you have is a precedent where a politician can, in Canada, we have a politician that seizes the money of the citizens of Canada without due process, right? Without a law. And then you have the plight of the Russian oligarchs. Not very sympathetic, but a politician can seize the property of a citizen of another country without a war, without a law. And so who's going to be confident in their property rights? If your own government doesn't seize your money, then someone else's government will seize your money. If you don't own the country, if you don't control the government, you probably don't have any secure property. If you do own the country, all your property that's outside of your country is still insecure. So this is an unprecedented time of insecurity combined with inflation and literally the collapse of currencies and currency derivatives. You could look at this war as kind of a wake-up call for everybody in the world. If you're at all paying attention, what you would realize is you really want crypto property, right? Since I can't rely upon property in any country, and I can't rely on any currency, and I can't rely on any currency derivative. And a bond is a currency derivative, a swap is a currency derivative, a value stock is a currency derivative, a piece of real estate, commercial real estate that generates rents is a currency derivative. So if I can't trust currency derivatives and I can't trust the government and I'm insecure about my property, what would you do? And the obvious answer is convert your property into crypto property or digital property, put it in cyberspace beyond the reach of any government or any other hostile action. And then make sure if it's crypto property, it's not a currency derivative, which means that it's inflation proof. And the idea of inflation proof property that cannot be confiscated by a hostile regime is a matter of life or death for hundreds of millions of people right now. But it's probably the most important thing in your world for the other 2, 3, 4 billion people.
What I don't understand is why, with this scenario, companies and institutions are not just running and adopting Bitcoin, and there is no like a mass adoption. Why is not happening in your opinion?
I think there's a lot of inertia in capital structures. If you look at capital structures right now, for example, there are large pools of capital that are tied up in institutions that by mandate can only invest in certain assets. So for example, if I had $10 billion of capital for investing in stocks, well, I can't buy digital property for 2 reasons. One reason is my mandate from my limited partners keeps me from owning property. I have to own securities. And the second would be that I don't have a relationship with a digital property exchange, a crypto exchange that can actually buy it for me. And the third, of course, would be, since my limited partners won't let me buy it and I don't have the exchange agreement, I also don't have all the security protocols within my own institution to be able to custody it. Like, right. Who should I trust with that? If you actually calculate how long that takes, it could take 5 years to change my mandates with my limited partners. Whoa. It could take 1 year to set up a new custodial relationship and vet a new exchange. It could take 6 months to a year to set up the security protocols. So if I had the mandate, it'd probably be a 1-year process for me to change my institution. If I don't have the mandate, it could be multiple years. Look, if you have $10 billion and you were given the money to invest in fixed income instruments, you're getting 2%, or maybe you're getting paid 1 or 2% a year. So you're getting paid $100 million a year just to manage the money. And so you go and you buy bonds that yield 2.5% interest, and then the money loses 15% of its value a year. So the real yield is minus 12.5%, and you're literally destroying $1 billion a year, but it's not your money, is it?
Yeah.
You're destroying $1 billion of value of some other investor's money. And so your choice is give all the money back to the investors and you're going to lose $1 billion or $2 billion, or keep investing it pursuant to your mandates that were set in the year 2007, right? And so you've got trillions, $500 trillion of capital, and they're all tied up in different kind of structures like that. That's one example of inertia. If you had $10 billion worth of real estate in downtown Moscow right now, why don't you just sell that and put that into Bitcoin? Because it's not so easy, right? I mean, Monty, that's another example
of... I know difficult now.
Right, so you see there's a lot of capital that is already committed in structures, and it'll take a while. Probably takes anywhere from 10 to 30 years for the capital flow out. If there was a spot ETF where I could just go buy $1 billion of Bitcoin in a spot ETF, then maybe I would do that. But of course, there isn't a spot ETF because there's regulatory inertia.
Yeah.
There's, and there's also other forms of inertia, like FASB has a certain accounting treatment. The accounting treatment of Bitcoin was established when there was no company in the world that had more than $2 million of it on its balance sheet. Okay, so a while ago, it was irrelevant. And today, of course, there are tens of billions of dollars of Bitcoin on balance sheets of publicly traded vehicles. But the accounting is still indefinite and intangible. Indefinite and intangible accounting means that if I buy $1 billion of Bitcoin and it trades down by 50%, and then it trades up by 1,000%, the fair value of it is $10 billion, but I would be showing it on my GAAP accounting statement as $500 million. And I would never write it up again. Okay, so if you're a publicly traded company and you have a successful business selling streaming video, and you have $10 billion of capital, and you go buy the Bitcoin and you make $100 billion for your investors, it'll look like you lost $5 billion for your investors. And then you have to explain that, and that's very hard to explain. And if you're a conservative CFO, you would think, do I really want to go through the headache of explaining this to my investors? And maybe I'll get fired by some random investor for making money because they thought I lost money because I've got an antiquated accounting rule. So, if you're wondering, why doesn't everyone just act rationally? Well, the answer is some people have organizational inertia. Their incentives are to continue to engage in the strategy they've engaged in for a decade. My grandfather invested in real estate in Kiev, and I will continue to do that, right? There's inertia. In other cases, they have regulatory inertia that's holding them from doing what they want to do, like these accounting and these other securities guidelines. And then in a third case, sometimes it's intellectual inertia or ignorance. Like if I said to you, if I came to you and I said, oh, you have a house and you've got no electricity in the house, Monty, and electricity is a good thing, so why don't you just install electricity? You would go, what? Wait a minute. How long does it take to figure out how to install electricity without killing myself? It's like, are you stupid? I mean, are you just against electricity? And the answer is no. It takes a lot of effort. It might take 100 hours of study to figure out the project to install electricity in my house or my hotel. So Bitcoin is like that. It's digital energy. And some people haven't adopted it because they don't have 1,000 hours or 100 hours to study it. And some people haven't adopted it because the regulatory guidelines are hostile to their business adopting it. And some people haven't adopted it because they're getting paid billions a year to do the opposite. You're paying me to trade fixed income sovereign debt. So why? And I know it's an awful thing. It's losing 10% of its value a year or more. but I'm getting rich doing it.
I'm making money out of it and I keep doing it. Sure.
Yeah, so go home to your wife and tell her that you decided to give up the job that you're getting paid a lot of money for to do a different thing, and you'll get by, right? So these are all reasons why the world doesn't just immediately change. But having said all that, the world is changing, right? I mean, Bitcoin was trading at $9,000 a coin, in June of 2020. And we're not 2 years later, and it's up by a factor of 4, right? So it is changing. Billions of dollars of capital are flowing. And, they may flow slower than some people would like, but it seems like it's the most disruptive force in the financial universe right now, and the world is waking up.